Hello traders, welcome to our edition of Tactics and Analysis for Wednesday, October 19th. Crude oil is proving to be an interesting barometer of global economic conditions. The commodity is testing highs, but many questions remain regarding its outlook. Crude oil has continued to trade near important resistance levels the past week, but has not been able to break through its perceived price ceiling. Industrial production numbers from China this morning, which were disappointing, continue to highlight demand for the commodity remain stagnant. The price of West Texas Intermediate, WTI, the U.S.-based crude oil, remains a challenging trade. Speculation in the crude oil market is dynamic, and traders must be vigilant about data and news. Crude oil inventories numbers will come from the U.S. this afternoon GMT time. However, the crux of the crude oil story remains the narrative about overproduction. OPEC announced last month producers would work to reduce supply, but questions remain about the effectiveness of the agreement. The OPEC summit did manage to boost the price of crude oil when looking at a midterm chart. It has been reported that non-OPEC member Russia is complying with cutbacks in production, but they have reduced their prices in an effort to keep market share. This underscores the producers' need to remain competitive, as supply remains strong and demand is weak. A problem for crude oil value right now is that many producers are afraid of losing their clients to competitors, which makes the OPEC agreement regarding production very fragile. Next week, oil producers from around the world will hold a conference in Turkey to discuss production again. This will include OPEC and non-OPEC members. Traders need to consider support and resistance levels carefully with crude oil. A long-term chart of WTI shows the tight road crude oil prices have traversed. Because global economic conditions remain murky, crude oil remains an interesting trade. If traders decide to sell the commodity, good risk management is needed. Opportunities do exist to take advantage of the crude oil price, but investors need to be nimble and understand that the market is not a playground for the weak. Short-term crude oil may be negative, mid-term and long-term, we are unbiased at this time. Thanks for watching the Tactics and Analysis. We wish you a profitable trading day.